obviously gone through a lot over the last 10 years or so. But over the last couple of years, there has been a little bit of a rebound, which we can obviously observe, but would like to get your perspective as well.
You're absolutely right. So, starting 2011 up to 2019 pre-COVID, one after the other, there have been events which, fortunately, unfortunately, sector had to go through. Some of it were force majeure, something like a COVID, right, which was beyond anyone's control. Some of it was financial challenges, something like the NBFCs went through crisis, so it created an untimely liquidity crunch. And some of them were regulatory, which I think amongst the three, regulatory is something which is which could be disruptive in the short term, but definitely has a very long-term advantage, right? So any industry in the country you see which is as mammoth as real estate, you look at insurance, you look at our equity markets, whenever these industries get regulated, they tend to grow exponentially from an AUM perspective, from contribution to GDP perspective. Same thing happened with real estate. So we got RERA, which is a regulatory authority for the sector, and then we had numerous such additional cleaning up measures, which is like implementation of GST, Benami Act coming in, right? There was certain governance linked image that was there for real estate, which has completely changed over the last 5 years, right? So that is one big advantage, both from an end consumer perspective and from a prospective investor, being a capital provider for the sector. So that's a very big plus. At the same time, post-COVID, what has happened is most of the developers were very slow in terms of picking up new land parcels, offering new products, very conservative on pricing, etc. All that has changed significantly, and now COVID is a talk of past, right? So it's about 2 years that we have gone through that phase, and repeatedly every quarter the numbers are topping the chart. You take up any developer, any top developer in the city, they are topping the charts every quarter on all parameters: collection, sales, acquisitions, everywhere, right? Couple of things that come to mind. Reasons for this is, one, people have realized the need for stability, right? People have gone through various challenges during tough times, so people require stability, and residential house gives you the biggest comfort when it comes to Indian mindset. That is one. I think second is, through this cycle, the mortgage rates were significantly low. Of course, they peaked up, but now that is stable and expected to go down. That shock is also absorbed, and hence the affordability significantly improved across the sectors, across the cities. Right. So it's not only a product-linked, project-linked recovery, it's an across the sector recovery. So you look at plotting doing very well, you look at villas and luxury housing doing very well, affordable doing very well, mid-income, of course, continues to be the largest volume driver in the sector. I think third is the transparency that people have seen. And fourth, I think, is because a lot of consolidation has happened, the larger developers are becoming larger, which gives them the ability to actually command certain premium, but at the same time give what the customer wants, which is a mix of good location, good amenities, right sizing. So a lot of research has now been put up when it comes to product development in real estate. So I think as a collective, outcome of all these factors, we believe residential real estate definitely is headed into a very strong tailwinded environment, at least from a next 3 to 5 year perspective. Commercial, there were some ifs and buts during COVID, but I think the best proxy is REITs, which have come up because they are the best proxy to understand how the vacancy is playing out, how rentals are playing out, and these are all listed companies. Again, there the vacancy levels are coming down. The rentals have been pretty stable. Most of the large corporates, IT-backed, ITES companies have been locking up large spaces, not only in IT cities, but also in cities like Bombay and Delhi, which predominantly are not IT cities per se, right? So that is doing very well. Warehousing anyways has been on a roll because of the way the entire e-commerce sector has come up the curve. So I think summary, all sectors look very interesting, very promising opportunities to look at. Probably best time for someone to take an exposure in real estate in any kind, whether it's for consumption or investing.
Just to add, Nitin, on the sector part also. See, today in India the developers sell close to 3 lakh units every year. which has almost remained constant. At least this was a number what we were selling 10 years back. It went down during 2013 to 17 20 period. Again we have reached a number of 3 lakh. I think in next 5 years this number is going to at least double from what we believe from 3 lakh units. Another parameter we have to look at it is which is inventory overhang, which essentially means how many months you will take to sell the balance inventory what you have. That is at historical low in India currently. It is almost close to 12 months average for entire India. This number was as high, just to give you a context, this number was as high as almost close to 36 months, maybe pre-COVID. So the sector was going through challenges, and we can now understand from these numbers that what has happened in this sector and what is the future expectation, that with now rates getting stabilized, or expectation that 1 year down the line the rates will start going down, home loan rates. I think the sector is now, what we feel is that it is going to blast from what we have seen till now.
Right. And while he mentioned a few opportunities through which people can participate, which is obviously REITs, but what other filaments would you add in this entire category? There's so many nuances, such a vast sector. What would be your add?
So yes, from an investment perspective, how you can participate in this sector, there are various opportunities. Of course, one is participating it through AIF funds. The other way to look at it is that if you want to participate in the commercial segment, you can participate it through REITs. The third is, which was least preferred, or at least a couple of years prior, it like owning real estate stocks, listed stocks. But now if you see the performance of those real estate stocks, they have given very good returns. So that is the third way to how to participate in this sector. And lastly, which we of course prefer the least, is direct buying and selling of real estate, because those have a lot of headaches and challenges. I think owning indirect real estate is what we feel is the preferred way to ride this journey.
I think absolutely these probably will be the right 4 buckets. An investor needs to ascertain what is his risk and what is the return he wants to make, right? So consumption, this theory doesn't work. So if you want to buy, there is no wrong or right time to buy. Every day is the right time to buy, right? But when you're looking from investing perspective, I think one needs to be mindful of what risk he's open to and what tenor he's open to, like any other investment product, right? So if you want to be extra conservative, play safe, right, go and buy probably REITs, which today give you an yield of between 6 and 7%. If you hold it for a longer time, expectation is they'll give you around 11-13% because of the yield compression and natural price appreciation and all, right? If you want to have a play around asset allocation and do a high yield play, right, then something like an AIF could be a very good opportunity. It gives you that stable time of 6 to 7 years where money goes slow. It's like an SIP into real estate. So you pay slowly, you get money, at the same time is diversified, right? Indians, we are Indians, so we like hardcore cement and stones around. Lesser preferred because for an individual it's difficult to manage owning real estate, as he said, or even owning commercial properties. But then if that gives you a higher, probably amongst the two, I would possibly choose buying and leasing a commercial property rather than buying a residential property and keeping it, maintaining it, and then getting stuck with it on a low yield. So it's horses for courses strategy, I believe. But I think we have enough now in the country in terms of avenues to participate in real estate that people can choose and possibly take an exposure to.